Welcome back. It's time for a special Election Day edition of, you guessed it, Three Stock Lunch. Here with the trades and to do our honors, Michael Farr, Hightower Advisors chief market strategist, a CNBC contributor, and a D.C. resident or worker, right, Michael?
I'm a D.C. native, fifth generation. Grew up in Washington. And I went to high school about 3 blocks from the Capitol at Gonzaga College High School with the Jesuits down there. They tried to beat some sense into me over the years.
I just wanted to lay that background as we welcome you here to close us out for the day. So let's move on to some of the trades that you think could be relevant as the votes come in. We just talked about Chevron. Pippa Stevens just told us about energy stocks outperforming the past 4 years. So which energy name you think would be a buy or a sell under the next administration? Why are you a buyer of Chevron?
You know, I listened, and I thought that was a really good report, and I really like Tyler's question, too, about, geez, with the price of the commodity dropping, how have they made money? And Chevron has a lot of resources, and they have a lot of fields, and they have gas, and they have all, and they're only really, they haven't done very well this year, 13 times earnings with a 4.25% dividend. If we get into a period of a revived kind of expansion, the economy's been doing okay, energy prices tend to drift higher. So as things aren't cooling down in the Middle East, I think energy prices are probably due to perform pretty well. For the longer term, let's go next 4 years. They've got a great balance sheet at Chevron. And if you're getting paid 4.25% in the dividend to wait while a commodity and diversifier for your portfolio does well, I think it makes sense.
All right, let's move on, Michael, shall we, to Apple. Bank of America out with a new note today reiterating its buy rating on that stock, despite the potential for new tariffs on imports from China under a potential Trump administration. Your trade on Apple and your outlook on technology more broadly, Michael.
I was listening to Mike Santelli. I was listening to Jason Trenner. Great. I love Jason Trenner, by the way. And the idea that these huge mega cap tech companies are going to continue to ride the wave, they're a little bit bulletproof. I don't think we've begun to really understand the full productivity from AI. I think that Apple was the one I was asked to talk about today, is one that I own. I would add to it, but this is not really a trade. This is a long-term kind of a core portfolio for me. I own it. We own it in firm portfolios. Up 16% year to date. Okay, trailed the index or the S&P right now. 11% grower, and again, 3.3 trillion. I think those tech continue to do well. But I think everything's off if we get a big red wave or blue wave. I know we've got to talk about another stock, but
yes,
I'll come back
a couple more. Let's talk about Tesla, because I'm curious if you're a seller of this one because of the election or just because, of being Michael Farr. But it's still in the green today, even as we're seeing some strange behavior with shares of DJT. We'll get to that in a second. Tell me what you think about Tesla and Musk.
I have to own by the numbers. I go to my discipline because I can't be emotional, and it bothers me when I see Elon Musk as emotional he is. But look, this has an $816 billion market capitalization, Tesla. If you take Ford, GM, and Stellantis together, that's $141 billion in market cap. It dwarfs them. They sell 1.8 million cars versus 15 million cars for the other manufacturers. I don't see how you justify this price, this market cap, and continued growth. You buy it today, you think it's going higher? Why? I don't get it. So no, sell it.
Sell it, he says. Michael Farr, thank you for joining us today. Hightower Advisors chief market strategist.